Hi, guys, and welcome to episode number 3 of We Are Building a Home, where I chronicle my experiences as a first time home builder. Welcome to those who have seen any of my videos before and to those who have not. Again, this video series is designed for people like myself who've never done this before. You don't necessarily have any of the supports or someone to call to ask those questions to. I'm just hoping to share my experiences as to help someone who may in the future go through something like this and you just want to know what to expect. And so today's episode is going to be a little bit different from the first two because, as you know, building a home is a process and it takes time. So I'm kind of in that waiting period. Like, we have the frame up, the bricks are slowly going up, and that's about it. So in thinking about the content for today, I started thinking about all those things that I didn't know about, but I know about now that since I've started this experience. And I was like, you know what? You might want to share a couple of those things. And so today, I just like to share some things that I learned after the fact, after my ratified contract, after like I had signed all the good paperwork and given away all my good money that I wasn't necessarily aware of in the beginning. And so to like kick things off, like one of the things that I did not know, and I was really excited in the beginning of this process, and I'm still excited, was that the interest rates were so low. So at the onset of all of this, of course, I got pre-approval, and in getting pre-approval, you get all of the forms, and one of the forms that you get is a cost analysis form. And so that cost analysis form gives you basically a breakdown of all the fees and everything that you will expect for closing, down payment, and all that great stuff. And so at the time, it gave me an estimated mortgage and an estimated interest rate. And so I was in love when I saw it. I was like, great interest rate. Of course, the mortgage was very affordable. It was something that I wouldn't have to necessarily strain to pay, which is where I wanted to be. I can't speak for anyone else. But then, of course, after I got in the process and a couple of months had passed, and actually it wasn't even a couple of months. I think it was like a month later when I was filling out some of the paperwork, additional paperwork for the mortgage company after my pre-approval. And I guess we had decided, like, yes, we're buying this home. Is I found out that the interest rates for the mortgage weren't locked. And so that just really blew me. I assumed that what I saw in that paper is what I will be dealing with at the end of this process. But I found out that the rates, because they are not locked, are basically at the whim of whatever day or time period I began closing on. And so for me, that was worrisome because I had a really good interest rate, 2.7. Things had just started opening up, and 2.7, I want to say, was like the highest it had been. It was like 2.1 and stuff like that. But 2.7 was pretty good. I think a couple of days ago I checked, it was like 3.1. So it is steadily rising. So it's one of those things where I was like, I didn't know. Now, one thing I found out, depending on what company you use, some companies will lock in your mortgage rate for no charge or anything. Like whatever mortgage rate you got, they can somehow lock it in for no fee. Unfortunately, the company that I use charges a fee for the mortgage rate to be locked in. I want to say it was about $2,000. And on top of that, it only lasts for 60 days or maybe 90 days. I couldn't remember, but whatever it wasn't going to be in the time frame that they were going to build a house. So it was one of those things where I would have to renew it, and then upon renewal, it would be whatever the rate was for that day that I renewed. So that wasn't just a wise investment for me at the time because I don't have like $6,000 or $8,000 and hopefully not $10,000 to give away to lock in an interest rate. So right now I am kind of at the whim of the market, and prayerfully things will pan out. I actually reached out to my mortgage lender the other day, and the mortgage rates had dropped. And so the original quote that they gave me was for the new one that I saw was $100 lower. So I'm like, okay, guys, you might be working some things out that I don't know about. So I'm excited about that. So prayerfully, it'll keep on dropping. So by the time I get ready to close, I got a nice, beautiful interest rate, and my mortgage will be perfect. But just wanted to let somebody know that because, hey, took me for a loop. You guys may know about it, but again, it's my first time. Another thing that I thought about, but I didn't necessarily think through like I probably should have, was like lodging. So right now I stay in an apartment, and my lease ended July of this year. And so it's October right now. And so in my lease ending, I just decided to go month to month. And first I thought it was like $200 above what I was originally paying. But here, the rent price, first of all, went up. So I had to pay the whatever the offset cost was from my original rent to the new rent price. And then I have to pay $250 on top of market rent each month until this house is built. And y'all, I'm not going to lie, I'm wasting a lot of money. At first, I was going to go to like a 6-month apartment or some sort of long-term, not long-term, short, extended stay. Couldn't even think of the name, extended stay. But I was just so overwhelmed this summer with like life and a lot of other stuff going on that I didn't have time to really pack and move. So I just decided to stay. But that is something to consider, whether you're going to like stay in an apartment or if you have a place and you're just moving from one to another. Like, what does that look like? I did have a friend who said, hey, y'all can just stay with us. But because I told her, like, I have no idea how long this process will be, I didn't feel really comfortable doing that, because being a person that's been on your own for a long time, trying to move in with someone and share a space and things like that, it can get kind of tight. Even though you're the best of friends, like, everybody has their quirks. So just really think about lodging in a process like this. Again, unless you have somewhere stable that you can definitely stay for an indefinite amount of time, those are factors you need to consider. Because right now, if I compare what I was paying in rent last year or at the beginning of this process to what I'm paying now on a month-to-month basis, I'm paying about $375 a month on top of, or in addition to what I was paying originally. So I just think about that every month when I write my check, or I use the debit machine or whatever we use to pay our rent. It's like, oh my God, that's $400 I could have did something with. But again, that's a part of the process. But definitely want to consider lodging, what you're going to do, and things like that. Last couple of things I want to talk about. Someone really asked me, like, okay, so why are you moving so far out? The place where I'm moving is outside of Memphis. So I live in Memphis right now, but I'm moving into Fayette County. And so someone asked, like, why are you going way out there? Well, one of the things that I wanted to do was to definitely be financially and fiscally responsible in this decision. So I researched the type of loans that were available. And for me, the best loan was the USDA loan. Now, normally when I tell people that, they say, oh, so you got in so you don't have to pay any money down. Well, the down payment wasn't a problem because I have the money for the down payment saved. But what I was looking at were the differences between the FHA loan and the USDA loan. So FHA loan, if you don't have 20% down of the entire mortgage cost, they will tax you monthly with something called PMI, which is private mortgage insurance. Basically, an insurance policy until you get to a certain amount paid. I think it drops off, or it may stay on for the life of the loan. I don't know. I've never finished out an FHA loan, but I do know that is an additional cost, and it can go anywhere from $100 to $200, just really depending on the amount of your loan. Well, USDA does not charge PMI, but they do charge like an annual assessment. But after doing my research, I found out that annual assessment is only about $50 a month on top of your mortgage. And so for me, that is what really triggered or drew me to the USDA loan compared to the FHA loan. Now, definitely FHA would have given me more buying power. I could have gone in Memphis, out of Memphis, South Haven, all the places like that. I am a little bit limited with the USDA loan because if you know anything about it, it's really for those rural areas. But again, for me fiscally, financially, that was the best option because it's lowering a cost that's going to be put on my monthly mortgage. And so, again, those are things that I thought through, but it's like, not really sure how this is going to pan out. So I'll keep you guys updated. Went by the house today. And again, the brickwork is still going up, but the brick is absolutely beautiful. I was worried at first because I chose such dark brick, and then I chose a dark exterior paint. So I was like, oh my God, I'm going to be like that dreary neighbor. But when I tell y'all, it is so beautiful. So those are just a couple of things that I wanted to just throw out there for this week's episode. I did find out some things from my new neighbor that I wasn't aware of, but I'll share that like in another video at another time that's more applicable. But yeah, this is a learning process, you guys. Like, I'm finding out stuff every day about something new, and I'm grateful for it because, again, it could be a lot worse. It's just one of those things where you just got to be ready for change. You got to be ready to ask questions. If you don't know what questions to ask, just ask God to give you some people who, you know, you can have in your space. So I'm very grateful for my new neighbor. If that's any indication of how the neighborhood would be, I'm very excited to just actually get this done so we can all, you know, just kind of have a good, solid community. So again, that's all that I wanted to share for today. Hopefully the next time that I do a video, I have some sort of update. I am anticipating the pre-drywall meeting, which should be coming up really soon. Not sure what the holdup is because to me it looks like everything is ready, but I think I got to pass some inspections with the wiring and things like that before they can put walls up. So I guess we'll find out soon. So until then, thank you for listening, and I hope that you have an awesome day wherever you are in your world. And until next time, see you later.